Let's bring on board Kunal as well as Nooresh, find out what they are actively tracking right now. Kunal, largely consolidating, I guess, for the next dash forward.
Yeah, I think it's not an active market, Aisha. It's a very passive market because a 40-point range for the Bank Nifty. I think that's the highest end of the range which I've seen so far for the banking index. Very difficult.
It fell short of 10 paise yesterday. Anything is possible.
Fair enough. But again, no complaints for the market trend. We've had a very fabulous last 1.5 odd months, so maybe a couple of days of more consolidation. The only pattern which I'm spotting on many of the charts is that many of the pharma names, for example, many of the FMCG stocks, what they've gone through is after a steep rally, these stocks have gone through at least 8-10 days of consolidation before these stocks have managed to give a breakout for themselves. So I would probably sense that this could be a similar pattern which could get repeated for the indices. So we are going into that patch of consolidation. I think we are almost on the 6th or the 7th day of consolidation. So maybe a couple of days of more consolidation before we can expect a bigger breakout on the indices.
Okay, so that's as far as Bank Nifty is concerned. But what's your take regarding the mid cap, side of the market, Nooresh, and which sectors the stock look the most interesting at this point of time? Nooresh, you'll have to unmute
The mid
yourself.
caps, yeah. The mid caps and the small cap indices are outperforming today clearly. The Nifty is underperforming given the heavyweights. So we are down 50, 60 points on the Nifty, where the impact is 30, 40 points from HDFC Twins, another 20 points from Reliance. So overall, it's a very sideways market if you were to remove out the 2-3 heavy names. But the mid cap and the small cap indices continue to look very strong. Out here, we are seeing a lot of action on the NBFC space. So this is the new say leadership sector which is coming up in place. So we've seen a breakout in Ujjivan. We are seeing a breakout in L&D Finance Holdings. We've seen this happen with the Mahindra and Mahindra Finance. Even the larger NBFC names like Bajaj Finance have outperformed. IDFC, one of the favorites, has been doing well. So NBFC and related financial companies are one which are coming on the radar. Apart from that, public sector enterprises continue to do well. Defense companies continue to make new swing and 52-week highs. So public sector enterprises and NBFCs seems to be the current flavor.
Okay, so that's the current flavor of the market, but there are a lot of stocks which are buzzing apart from news flow as well. So let's track some of that, also the price volume buzzers. First up, we also have names coming in with respect to Trident, wherein we have seen a breakout from the cup and handle chart pattern. It surpassed the 200-day moving average and has hit a 4-month high on an intraday basis. So Trident high by 6%. Birlasoft is seeing quite a bit of breakout today. It's hit a 5-month high on an intraday basis. The volumes are almost 5 times the 20-day average that we have seen on Birlasoft, and that stock trending high by 8%. Mazagon Dock, apart from the other defense plays, is also quite excited. In fact, it snapped the 8th session streak of forming lower highs, and it's hit a 4-month high on an intraday basis. Volumes too on the higher side. Kunal, Trident, Birlasoft, Mazagon Dock, is there any name that you would like to buy even at the current level?
Trident could be interesting. The stock has confirmed a 200-day moving average breakout. That's also another technical factor which has happened today for Trident. Other than that, I think Birlasoft, I would believe that could probably be at the fag end of a price rally. So by that I mean, there could be at least a near-term correction for the stock, because the way the stock entered into the kind of a breakout from 260 levels to 300, consolidated for almost 8-10 days or at those levels, and then provided a breakout. So which means that the stock is entering into a bit of an overstretched zone for itself. I would sense that maybe the stock comes back towards 300, 310 odd mark. That could be a better level to buy. Trident could be interesting because price volume breakout, 200-day moving average breakout, as well as a flag pattern breakout. All three of them have combined quite well for the stock, and we can expect possibly a dash towards the 40 to 45 zone for Trident.
Okay, those are a couple of active trades.